For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're talking about the process, the day 1, day 2, day 3, but also understanding if you're looking for setups. For example, I'm biased towards the short side, and if I'm shorting something that's in the first day 1, day 2, day 3, I get this question from traders all the time. What's a 1-star, 3-star, 5-star? And I've talked about this in previous videos. You can Google those and take a look. 3-star, 1-star, 3-star are 1-star would be high of the day in a session scalp. Day 1, maybe day 2. We might get a day 2 trade for a session scalp if I was shorting into the front side of the move. So again, understanding that when we're in our initial Monday starts the week, so that's always our day 1. It could be an inside day. Day 2, Tuesday, starts our count. We could be going higher, and day 3 goes higher. That's the front side of the move. Okay, so if I'm looking to short a market, you've heard me say, we get a day 1 runner. We'll start this again. We can get a market that's maybe broken out of a coil, taken out a previous day's high. And I talk about on a day 1 runner, you may not get a decent trade. Day 2, however, might come back up to that area in London or New York and give a better day 2 trade. And that is still on the front side of our move, but we can break structure and come back up on day 3. But we've got to break a structure on the inside, day 2, and that can come down day 3, day 4, whatever that is, no idea. But in terms of simplicity, a simple thing to understand is that when we are on the front side of a move, that rising trend line is the front side of the move. That means that the likelihood of me having a huge short trade are less, and the same applies for markets where traders may be looking for a big long trade, but they're still on the front side of the down move. So I'll redraw that, and we'll just make a straighter line. We may still be on the front side of that move. Now, once we see a break in structure, we're on the back, potentially on the backside for a long trade, depending on how that sets up and the timings, etc. But the purpose of me explaining this is because traders are still struggling with the understanding of the day count. And when I'm on the front side of a move, day 1, day 2, day 3, I might have a break of structure on the inside. So again, my front side is intact until we see that break of structure. Then potentially we could have first red day. We could have 3 peaks for a high of the day, high of the session, US trade or London, whatever that may be. But this is the front side, and until it breaks structure, then we are on the back side. So if I'm looking to short, front side's up, I'm looking to short, the back side is once we break through that rising trend line. There might be a retest that fails, first peak, second peak, short trade, and again, the same thing applies on the downside for the long trade. Let's take a look at our charts. When we start the week, as I've explained, Monday is our day 1, and we'll just put an M on here. This pink line designates our Monday. And again, if I'm day 1, we have day 1 longs were in the market on the Friday, so we broke a previous day's high. We came off the low from the previous day. We broke, traders broke out, and that resumed. They put in peak formation low and continued that higher highs on Monday and triggered day 2 longs in the market, but we also have a rising trend line. That's still the front side of the move. Now, there may have been traders looking to scalp, and as I said, on a day 1, if it's making new highs or new lows, depending on what's happening, this is still on the front side of the move. We get a peak formation up into the peak formation from day 1 that finally breaks structure, trap volume up top, breaks structure on the inside, peak formation back up into the peak formation in Asia for a short trade in the Europe-London window. Again, peak formations are up. We are on the back side now. The back side of the move. The front side was the move up. Peak formations are up for a low-hanging fruit collapse, easy money trade on day 2. So again, an example of where day 1 puts the high in, day 2 comes down now, works into the low before reversing and breaking out of the high of the day of Asia. So again, noticing trap volume up top with our break of structure, front side to back side, trap volume down below for break structure on the inside for the long trade back up. So we have our backside short trade day 2, but they work into the low and break structure. So again, coming back to the understanding of peak formations were made in the equity hour, and they broke out in the next session and put a peak formation high in that was taken out as well in the gap time. So London puts a peak formation high in. They trade through it. Break a structure. Thesis now is we're making higher highs. I'm expecting the V bottom 1, 2, 3 down for the long trade back up. Now, we won't talk about news or anything. The point of today's video is I want to talk about front side and the back side. This will help you separate what you're looking for. So day 1 on the Canadian dollar, we broke down on the inside for the reversal trade on day 1. Peak formations were up, false break from Wednesday, Thursday's high, took out Friday's low. We are now on the front side of the down move on day 2. We get a high of the day US session trade for the continuation in the front side of the down move. That market went into consolidation. Again, Asia puts in the high, peak formation high, breaks out in the London session, peak formation low. Day 3, trapped volume is not below the blue tracer, but it's below the high of Asia. Trapped volume below the high of the day. They break out. They break structure on the inside with the continuing bullish running wedge for the trend trade in the US window. So again, pin hammer, second hour, even though we had news on the calendar, all the foundation building blocks were there for the continuation long trade back to the peak formation high of the US window. A 3-session setup, US, Asia, London for the continuation trade in the US session. Break in structure from the front side of the down move. Okay, the down move is the front side. We break structure for the long trade on the inside. You're going to see different variations of this. Again, go to your charts, study them. This is just a basic boundary line that I'm looking as my reference point, day 1, day 2, day 3, before I'm looking for trades in the opposite direction. You can look at the euro. Day 1's an inside bar, peak formation underneath on Friday. Day 1 breakouts on Tuesday. So day 2, we have first day for long traders triggered into the market. We are on the front side. We're outside of the previous day's high. Peak formations are up in London, but they continue the move and make higher highs. We're on the front side of the move. Market goes sideways into consolidation before breaking down after our trend line break. Peak formations are up on the new day. So again, recognizing day 1, day 2, high of the week, trap volume up top. Trap volume up top, we're on the inside. We're looking for peak formation highs. Peak formation high in London, it continues to break down. I'm looking for peak formation highs in the US session for the low hanging fruit continuation trade. Peak formation high, they trade back up into it 35-40 minutes into the hour, breaks down. We get our New York second hour opening for the continuation trade. Again, where do I get in? Where do I get in? I just get in above the numbers, put my stop above the high. That's it. Don't make it complicated. Once my peak formations are in place, just highlight this. I'm just getting in. I'm just getting in above the numbers. I'm targeting, ideally, if we come back to our break in structure, the front side of the move is up. They break structure and go into consolidation. Day 2, peak formations are up. It breaks down. We're looking for peak formation highs, trading back through the low of the US session, which gives us 25 to 50 pips if they put 25 into those traders. Again, an easy, low stress trade. Break in structure. Front side of the move is broken. If we were trying to short this on the way up, as we saw on day 2, and I've mentioned this with day 1 runner, this is our first day of breakout on Tuesday. The short traders struggled until late in the session to maybe get anything decent, whereas we get the easy low-hanging fruit collapsing trade after we break the front side of the move. Gold, same thing. We get a day 1 breakout on Monday. Tuesday continues that move, still on the front side of the move, higher highs, higher lows. We are in a breakout. We get a stop hunt, the end of the London 12 candle window, and a continuation higher highs for the V bottom peak formation at the New York Open for the continuation long trade on day 2 in line with the front side of our move. We break structure on day 3. So we have volume trapped up high day 3, above the double zeros, peak formation, back to the high of the day, London. Easy 100 pip trade down. Day 3, peak formations are up. We're looking for a peak formation high in the US session on gold in line with our break in structure. We get a pin hammer on the ADP news that acts as our pump and dump. 1 push, 2 push, first bounce. Traders got an easy 25 back to the high of the day if they took that. And a 3rd push before breaking down, heading into the New York Open, an easy almost 50 pips straight down on the New York Open into the low-hanging fruit and the trap volume. Again, paying attention to space, the space that was created by the pump and dump. Again, coming back to day 1, day 2, front side of the move. Day 3, break structure, breaks down on the inside. I'm looking for the peak formation highs in line with the short trade. We get news, ISM at 10 o'clock New York for the blow-off, 50 pip blow-off before they lock in the low and thus far have headed sideways into consolidation. So again, the front side of the move is when we're making those higher highs, higher lows, or lower highs, lower lows if it's in the down template. Study these. This will help you understand which trade setups you want to be targeting in the sessions that you're trading with the day count. For example, again, if you're looking to short trades and you're still on the front side of the move, you may not have the same degree of success as you would once we're on the back side of the move in line with short trades. Keep it simple, traders. Hopefully that adds value. Go back, study your charts, review them, front side, back side, know the difference. Day 1, day 2, day 3. Keep getting better, and may the markets go with you.